Merkel and Sarkozy confirmed strategy to strengthen coordination of budget and economic policy following S&P's warning late Monday that it may carry out an unprecedented mass downgrade on members of the Eurozone, including Germany. Asia closed lower, Europe is mixed, and the U.S. futures point to a slightly higher open. Gold is down just over $11, and oil trades mostly flat at $101. The earnings calendar is light, but watch for commentary and business updates out of the UBS Media Conference. I'm Jill Malandrino with The Street, and the morning call starts right now.
Good morning. Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Jill Malandrino with The Street's Options Profits, and together we bring you the morning call. So another interesting day yesterday. We're up 167. S&P comes out. They're saying we are going to downgrade debt of the Eurozone region.
Yeah, they basically said if you guys don't take care of your business on Friday,
we're going to take care of it for you.
Exactly. So, but with that said, it's the same action from last week, whereas you had huge gap ups, and if you wanted to place trades intraday, if you did it after the first hour, you were never profitable. That you came in at the end of the day, it was hard to handle. So even though this market has had the impressive move off those lows, we're up about 7-8% in the last week. For traders, it's been a very, very tough rally to handle.
Right. So, you know, we had a week where we were up 7%. The move was unbelievable. So where are we positioning now that we're starting to see the markets digest a lot of the move that we've had in the news from yesterday?
Well, traders are looking for this digestion to take place, so this way we can get a meaty trade above the 1260 to 1265 200-day. Because right now you have so many cross currents. You have the smart money saying that the move by the ECB that ignited the move last week won't last. So the question is, when does it become a headwind? Right now it's a tailwind. And then you have IBD, their big picture, who people follow. They're still in a market correction. So here we are, had a great week. We're about to be poised to break above a level that could add about 3 to 5% to the rally, and they're in market correction. So it's everyone needs so much over confirmation. So that's why it's hard to put the risk on.
Well, I also think, like we were talking about before, no one has mentioned China at all. Their manufacturing number was down almost 10 points from the last reading. And a lot of the companies here domestically predicate their growth forecasts on what China's doing. So I think that's something else that the media really hasn't spoken about, and something that you have to keep in the back of your mind in addition to what's happening in Europe.
That's true. So that's a headline you have to worry about. Also, I've heard some headlines about their real estate losing a little steam. So they might actually have to build another one of those cities that nobody lives in, just so they could keep up with it. Well, anyway, let's take a quick look at the chart of the S&P and show you the level that we're talking about. So, when we broke this wedge to the downside, IBD put the market back in a correction, and we just rallied all the way back to it, right back to resistance, and they're not even back in a confirmed uptrend. So I guess they're waiting to see if we could break above this downtrend with some volume, with some institutional interest for them to come back. But then if they put it in up here, you just missed a nice size move. Well, anyway, as a trader, we're watching this 1260 area. If we can get above it, I think guys will add to positions for momentum, take it back to that 1292, and then once we get through 1292, the first, second quarter of next year, we could easily see this level of about 1340, which we hit last summer.
Okay, moving along to the sector spotlight, what we do here for T3 and our street readers, we look for relative outperformance that outshines the market, whether it's on the upside or the downside, and that's what the semis are doing. We've gotten really warm to the sector over the past 2 to 3 weeks. They're reporting their mid-quarter update. Everything appears to be in line. Inventories are nice and lean, and the supply chain doesn't expect things to get worse. We saw a number of broker initiations and upgrades this morning. I think we only saw one sell out of Goldman. I don't remember the name of the stock, but it seems to be that the analysts fundamentally and technically are warming up to the space as well.
Yeah, the traders have been flocking to the semis every time the market's getting hit, and they've been showing relative performance. And the theme into the end of the year are strong stocks get stronger because people want to mark them up, and then the crap stocks that were thrown out the window for tax loss selling, they lift. So you want to look at the strongest ones almost and the weakest ones in the last month or the first month of next year. So if you take a quick look at Intel, it's a stock that we've talked about so many times. It's above all the moving averages. It's hovering near the highs here. If this could break above 25, 25, 50, you could see a move north of 26 come the end of the year and even the beginning in January.
Moving along to KLAC, one of our favorite names to trade in the late 90s. That was up 3.71% yesterday.
Unfortunately, a lot of traders that did well within the late 90s, they stayed with it until the mid-2000s before they read the book Who Moved My Cheese. But anyway, you know, you look at CLAC. CLAC is right near these, you know, this area that it fell from last time. Just shows you again the frustration. Look how hard this move was to the downside, then right back here. So if it could just hover, you know, a bit higher, hover near this area, I think traders will be trading this for a move above 48.70 for momentum.
Moving along to Novelis, ticker NVLS. CLSA, one of the axes in the tech space, initiated with an outperform today. They reported their mid-Q last night, and everything is in line.
Okay, and I like the chart. So if you look at the chart in Novelis, this one hasn't had a huge move, and it's also kind of tight. You know, you had your move lower with the rest of the market, held the important moving averages, and now it's right back in front of 36. If this can get above 36 and stay above it, you're going to see a move up to that 38, 39 area, and that's almost back to the highs of the year. So this looks good. Oh, and this is a huge level for it to clear too. So Novelis is looking like institutions keep buying it, and we could see some momentum here.
Moving along to Texan, Texas Instruments. It was upgraded to outperform at JMP this morning, and it reports on Thursday.
See, this one could be a bit complicated because it has the report still on Thursday. It's upgraded today, so it might run into Thursday, so you have to be a bit more careful. We'll reevaluate it there. But if you look at the chart here, Texan looks okay. Has a huge level of resistance right in front of it, so this could be a little bit tricky. Out of all these charts, this one to me doesn't look like the one to go to right now. You're going to have a huge wall of resistance around 31.40 to 32, so maybe from here to there, that's your easy type money play going into Thursday if the group stays strong.
Okay, we're going to take a quick commercial break, and when we come back, we jump into the trenches with our latest theme.
Hi, I'm Sean Hendelman, CEO of T3Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back to the morning call. We're going to jump into the trenches with the consumer staple names. We had some fantastic calls with this group over the summer. It's starting to look a little overbought, and the way the market naturally works, we're going to rotate into, I think, industrials as we move into the new year. But let's kick it off with our first one, Colgate. That was our options profits play over the summer. It did really well. Has a nice dividend, but it's starting to look a little toppy. Trades just at about 18.5 times, and the group is at 15.6.
So if we get a risk-on type trade and the market breaks above this area, you're going to probably see some money to more of the sexier names. Like you said, like industrials are looking a little sexy, which is a little off because that's usually not the case, but it looks good. You look at this chart, though, it looks okay. It's in stride. If you take a look here, you will see that it's been holding this support. It's been holding this 86 area. Short term, if it breaks below this support level of 90, you could see a move back down to bigger support. If it could hover here, you could see another quick little move here above 92. So watch this little inside range here between 90 and 92, and that'll tell you which way it goes next.
Moving along to Kimberly-Clark, ticker KMB. We had a quick play with this over the summer. It kind of caught us by surprise. Last week, 4 insiders sold stock, so that might also lend to the fact that we think it might be a little overbought. KMB within the group as well, it seems to be the name that has the most margin pressure.
Yeah, you never want to see insiders selling, especially 4 of them. So if we take a quick look at the chart, let's look at some of these levels. You know, KMB right here, again, hasn't really done anything. It's been going sideways. It is holding above, you know, this support level that's held. You had 2 faulty days, you know, on 2 strong market days. So that's a bit of a warning sign. I think if it gets below this 70, you could see a move back to 68. But like the last chart that I saw, if this market hangs in tough, you know, some traders might look at it if it goes above 72, but it's not going to have such a sexy move.
P&G, another name that we looked at in the last quarter that we did pretty good with, but again, it's facing increased competition. That's another name that has expressed some concern over commodity costs as well.
Yeah, this chart looks okay. Doesn't look like anything that's going to go a blockbuster move. You take a look here, you'll see that it is above all the moving averages. It's coming into a bit of a downtrend. You know, traders don't really talk about this name. It's more of an investment. I guess if you're in tier 1, maybe you could make an additional cash flow trade at 65 to take it back to the highs. But as you said, you know, if you're looking to put money somewhere and it's limited, this group won't have that huge move to make it worth your while.
Speaking of putting money somewhere, again, even if we think that consumer staples might be coming in a bit, we always do look for those outperformers. And one that we're looking at is Church & Dwight, ticker CHD. This stock has grown 108% over the past 5 years, and I think the chart is confirming that this is going to be one of the relative outperformers within the space.
Yeah, so if you need to put in one stock within this group, you know, this one actually technically looks a little bit better than the others. So if you look here, you will see that it's above the moving averages. It's kind of sloppy right here, very, very sloppy. I don't think any traders will look to this or get excited unless it starts getting above 45. But if it starts to clear 45, you could see a move to new highs here. It's very slow, it's very methodical, but this is your level right here around 45.
Okay, so the theme again that we're starting to warm up to, we think that the consumer staple space has performed great over the last quarter. We think it's a little bit overbought right now, and the industrials have been quietly performing, and they are undervalued relative to the rest of the market. Moving along to quick hits for some quick cash. Keep in mind the UBS Media Conference is yesterday and today, so we're seeing a lot of news flow out of there. Amazon, Netflix, quite a bit off of that. Let's take a look at Amazon first.
Well, Amazon's been one of those high beta tech names that has been very weak. Ever since earnings, it's been in the penalty box. You had a little bit of a rally here, but I see an ascending channel that you have to watch very closely. Take a quick look. This stock right now, again, it was earnings shortfall, came in, never was able to fill this gap. Once it broke below this 215, a lot of guys made some money short it. So now you have a bit of an ascending channel here. You have to be careful because Amazon could be very whippy and violent, but if it starts to, the market doesn't break higher, and if this market can't get a bid, this thing starts to break below 193, and you could see some more downside action. I don't like the type of bounce that has taken place here.
ARBA, it's broken out of a wedge. There's been some takeover speculation in the name, and Barclays initiated within outperform this morning.
Yeah, yesterday this one had a big move. We talked about stocks from the 90s. Remember the B2B group? Well, here you are. This one looks good. Big move yesterday. Above a downtrend. I would say give it some time to digest and use the high of yesterday as a pivot, both long and short, which is around 34, 55.
SODA, I don't know that name as well, so I don't have much to talk about there, but it was up just about 9% yesterday, so obviously something.
Well, it's one of those stocks that it was a momentum leader. You actually probably heard Herb Greenberg talk about it a lot with all the other ones. It lost its momentum. It's been a great short. But like the January effect stocks do, once they're tossed out the window for tax loss selling or not to have them on the books, they sometimes lift. And this one does have some growth, and it does still have some interest. So if you look here, yesterday was the first up day, out of this mini wedge. I think, guys will be looking to buy it through yesterday's high of about 33.24. And if it does get some traction, for a real move, this thing could see 40 to 45 at some point going into, the first quarter of next year. And one other stock that I didn't mention when you had the, with Amazon is Netflix. Yesterday, guys made good money with Netflix. I know the stock is, in the trash bin, but sometimes someone's trash is someone's treasure. Right. So if you look at Netflix here at the bottom end of this range, it looks okay, for some continuation. This stock gets above, this 72 area, and then you have a quick little day trade to 76, and maybe, who knows, if it bounces through the year end, you could see a move to test this moving average and this gap around 93, and at least the recent low as your stop.
And rounding out our quick hits with Honeywell, which is going to be our options profits play of the day.
Okay, take a quick look here because traders typically don't trade Honeywell, so we'll see if there's any action. This stock has had, a nice move with the market right into old resistance. So if some people would say this could be a double top, and if that's the case, we start breaking below this 54, and you can get some downside type action. If it goes sideways and doesn't break this level to the downside, you could see a move through this area, and that's around 56. So at least you have, your zones to play against.
Right. I mean, fundamentally, I think that there might be some short-term pressure, especially with the news that we've seen come out of China and that poor manufacturing number. But again, that's why we use the options to hedge our risk and have some control management in there. So we're looking at Amazon, Netflix, Honeywell, Soda, and ARBA today for our quick hits. So, today it's kind of quiet on the earnings calendar. AutoZone was really the biggest name that I saw that reported 7 o'clock, so I'll have to go back and take a look at that number because that is a big barometer for the consumer and auto space. The economic data on our side is pretty quiet, so I think what we're going to be focusing on is the European headlines, and again, I think that we need to look for some Chinese news as well.
Yeah, we'll see when the market wants to start focusing on that. Right now, I think they're starting to they want to stay enamored with Europe. You have that huge treaty meeting on Friday, and I think they're already like taking some expectations off the table that whatever they do won't be ratified for months. So again, when a lot of people saying this isn't going to work, you have months to figure it out. So let the market action figure it out for you. So I think as long as we stay above 1240, you're going to have some pent-up long-side momentum there. And if we can get above 1265, you're going to see some performance chasing, and you're going to see some shorts get squeezed once again, especially if they're rolling it up from last Wednesday when they didn't switch gears on that ECB announcement.
Okay, well, we'll see if it's a little boy that cried wolf or they actually get something done this time around. I'm Jill Malandrino. That's your morning call. Don't forget to catch Scott at the end of the day with his market wrap.
Thank you very much, Joe.